What's going on, guys? Welcome back to another video. I'm going to be doing a trade review from my trade on Friday where I traded Apple, and I'm going to break that down for you, showing you why I chose Apple, my trade plan, the mistake that I made, what I did correctly, how I turned a loss into a profit, and key levels. So showing you those points, let's jump over right into the trade. Over here we have Apple on a 15-minute chart. You see this huge post-market jump right here. So this was news, and we're going to use that news as catalyst for our trade, and that is why we chose to trade Apple. It was a huge gap up due to a record, I think, $110 billion buyback. So we're using that catalyst, and it's a trade that I really like to make, is looking for gap ups. Pre-market of 3% or greater. Okay? And the psychology behind this is people that bought this stock or in a trade previously before this gap up are going to want to take profits. So the profit taking creates a drop in the open price within the first hour, and then we look to capitalize at people coming back and buying in the dip in the morning within the first hour of the trade. So showing you on this 15-minute chart, my key levels that we're going to show you are pre-market lows and pre-market highs. That's all I'm worried about unless a new level forms throughout the day. Now we know the key levels. Let's jump over to the 5-minute chart, which is the chart that I typically trade on. But on this day, we used a 2-minute chart to enter the trade, and I'll break that down for you in just a second. As you can see here, right at the open, we had this failed breakout. This is why I don't trade the first 5-minute candle or even the first 15 minutes of the opening price action during the open. Why I don't trade the first 15 minutes of the open. We broke just over pre-market high, didn't hold, and it failed. Once it failed, this is confirming my trade plan. The stock will drop and fall to a key level and then bounce, and that's what I'm looking for. If it breaks this key level, we no longer have a trade because this key level is support, and then it can potentially fall down further to the next level of support. So this opening 1-hour trade would be no trade whatsoever if it breaks that key level, which again is our pre-market low. My mistake I made is I bought this first bounce right here on this candle, this green candle. Why is this a mistake? A lot of times this trade likes to make two legs, right? We have a down move, a bounce, and then the second leg down before the reversal. So my problem here was patience. But what I did right with this mistake is I cut my losses early, okay? I cut my losses early, which in return, instead of trying to hold this and praying that it bounces, because you can see here it bounced at our key level, but we don't know that. This has already happened, so we don't know that it's actually going to bounce. It could just keep going down. So it's good that we got out of that trade very quick, very early, and then took the trade that I originally wanted to make. And you see here on the 5-minute chart, we have a wick, a bounce. This rejection, this shows you that this key level, pre-market low, was bought up. On top of that, Dow, NASDAQ is all up and green, so we are looking to trade with the bounce with the market. If you come down to a 2-minute chart, you can see that that 5-minute wick is actually a bounce here and a bullish engulfing candle here at the bottom. What I'm looking for is to take out that previous candle after hitting this key level, pre-market low, take out the high of that candle and potentially consolidate and then get in. So I was able to get back in this trade. Once we broke over this candle, we had this little bit of a pullback, holding, and then we got in. And this was a trade to hold throughout the day. And then once we entered the trade, we dropped down to a 5-minute, back up to a 5-minute chart. That way we don't get chopped out because a 2 minute time frame is hard to trade and will chop you out unless you have a lot of experience trading the smaller time frame. The smaller time frame you have, the harder it is to trade. So once I entered the trade on a 2 minute, I went back to the 5 minute, and I ended up riding this trade up back, and my plan was to ride it to pre-market high. And once we broke this high right here, I exited this trade. So yes, I took a loss right here, and because I cut my loss early, and I re-entered the trade where I originally wanted to trade, and rode it back up, I was able to not only accumulate this loss, but also even more and turn a profit. So overall, a good trade, a good day. What I could have done better is just been patient and then avoided that loss entirely, and it would have been a lot larger profit if I had just made this one single trade. So it's something I have to work on, is being patient. But it's super simple trade to look for every day is gap ups, 3% or higher, news catalyst, earnings, whatever you can find. Look for that dip buy into pre-market low, and look for some consolidation and a rejection and some volume, and enter that trade. Hopefully it helps you guys. Come back, check out my channel, subscribe, and I'll be making some more videos of my strategy coming in the future.